Think your money is safe overseas? Think again. As of mid-2025, over 112 countries are actively feeding your financial details to your Internal Revenue Service IRS. Whether you're an American retiree abroad or an entrepreneur looking to escape tax surveillance, your bank account might already be under watch without your consent. Welcome to the world of FATCA, the Foreign Account Tax Compliance Act, Washington's global financial dragnet. But here's what they won't tell you. 94 countries and territories still refuse to play ball with the IRS. No automatic reporting. No bank data sent to U.S. tax authorities. No questions asked. These rogue financial havens are quietly shielding billions in American wealth, and if you're looking to go off-grid financially, these are the last frontiers. Some are war-torn, others are luxurious tropical enclaves, but all of them have one thing in common. Number 10 Solomon Islands. If you think you need a Swiss vault to stay off the IRS radar, think again. Try the remote and overlooked Solomon Islands. This Pacific nation of 700,000 people has zero FATCA agreements, which means local banks do not share U.S. account holder data with American tax authorities. Even if you walk in and declare your U.S. citizenship, no automatic flag gets raised. With a GDP per capita of just $2,100, the Solomon Islands may not scream wealth, but don't be fooled. A booming cash-only trade in copra and logging moves nearly $220 million annually off the books and far from U.S. scrutiny. It's a textbook example of how a low-profile economy can offer high levels of financial opacity. Here's the kicker. Over 85% of the population lives in rural villages and relies on local cooperatives, which rarely use formal banking systems. That means only 15% of adults even hold a bank account. So if you're moving dollars around here, chances are it's happening in cash, and no one's reporting it to Washington. With little digital infrastructure, no IRS TIs, and a cultural reliance on informal finance, the Solomon Islands offers more than just a beach escape. It offers a financial blind spot that the IRS simply can't see. But what's next on the list will shock you even more. Number 9 Palau. Don't let its postcard perfect beaches fool you. Palau is more than a tourist paradise. It's a financial ghost zone. With zero FATCA agreements, banks in Palau don't automatically report anything to the IRS. There's no bilateral deal. No Model 1 or 2 IGA. If you're banking here, you're invisible to Washington. Palau's total GDP is just $300 million, yet offshore entities, especially international business companies, nearly $450 million in deposits within the island's LAC system. That's more offshore money than the entire country's economy. How? Its trust and company laws protect foreign ownership identities, making it an ideal spot to hide assets. Even as tourism booms, bringing in 10% annual increases in lodging tax revenues, foreign currency transactions happen off the books. Local banks keep records vague, and due diligence rarely involves alerting U.S. tax officials. If you're an American who wants a discreet corporate setup, Palau's legal shield is near impenetrable. Bottom line, Palau may be small, but in the world of financial secrecy, it punches far above its weight. It's the kind of place where the IRS doesn't just lack access, they don't even know what questions to ask. Number 8 North Korea. It's the most secretive nation on earth, so this one won't surprise you. North Korea has zero FATCA agreements and absolutely no international banking transparency. That's not an oversight, that's by design. The regime doesn't cooperate with Western institutions, least of all the IRS. All foreign currency holdings in North Korea are state-controlled, and private banking is illegal. So if you somehow opened an account in Pyongyang, the IRS isn't the problem, your own freedom is. Any American citizen found handling money inside North Korea risks imprisonment or worse. Despite a 17% economic contraction in 2023 due to sanctions, North Korea has become a crypto hotspot, using illicit mining and ransomware schemes to earn untraceable dollars. Those digital assets, outside FATCA's reach and far beyond the IRS's claw. It's extreme, dangerous, and not for the faint of heart. But if your goal is complete financial blackout, North Korea is the IRS's ultimate blind spot. Just don't expect to get your money back or leave. Number 7. Myanmar. Following a brutal military coup, Myanmar plunged into dictatorship and financial opacity. As of 2025, the country still has no FATCA agreement with the United States. Its banks reject U.S. data requests outright, citing national sovereignty. Translation: your account stays private. Sanctions crushed the economy, causing a 25% GDP collapse in 2023 and pushing the public toward black market currency trading. The official banking system is so distrusted that many transactions now run through Hawala Network's ancient, informal remittance systems that leave no paper trail. With foreign exchange reserves falling to just $6.1 billion, Myanmar is desperate for US dollars, but it refuses to submit to US oversight. That contradiction makes it a prime haven for Americans wanting to hide funds so long as they're comfortable dealing in cash and crypto, not comfort and convenience. If you're a digital nomad or ultra-private investor looking to bypass the system, Myanmar offers total blackout conditions, but at the cost of extreme political volatility. Still, when it comes to IRS-proof finance, chaos becomes a feature, not a bug. Number 6. Guatemala. Tucked between Mexico and the Pacific, Guatemala flies under the radar, but not when it comes to financial privacy. The country maintains zero FATCA agreements, meaning banks here don't report U.S. accounts to Washington. That silence comes with serious economic implications. Each year, an estimated $2 billion in illegal cash exports moves through Guatemala's borders, amounting to nearly 6.5% of national GDP. Combine that with a lightly regulated banking sector and rampant corruption, and you have the perfect storm of IRS invisibility. Anti-corruption probes show that 18% of bank records go missing when U.S. authorities request them. Meanwhile, over 40% of rural populations remain unbanked, relying on cash or underground cooperatives that don't keep standardized ledgers. So, if you're an American expat wanting to keep your finances in the shadows, Guatemala offers a tantalizing mix of lax oversight, decentralized banking, and bureaucratic smokescreens. Just don't expect anyone to help you if things go wrong. Number 5. Eritrea. Most Americans couldn't find Eritrea on a map. But the US government certainly can't find your bank account there, and that's the point. With zero FATCA IGA signings, Eritrea routinely ignores US inquiries and refuses to share account data, even when formally requested. Despite a meager GDP per capita of $700, Eritreans rely heavily on the Hawala system to send and receive money. 15% of all household income flows through these untraceable channels. No receipts, no audits, no reporting. Just word of mouth, trust. Inflation surged to 37% in 2024, forcing even more transactions into the black market. Eritrean banks barely function, and fewer than 20% of adults even have accounts, creating an environment where cash and crypto dominate and IRS scrutiny is a fantasy. For anyone seeking extreme financial anonymity, from political dissidents to digital fugitives, Eritrea is one of the last true frontiers. You won't find luxury here. But if you're chasing invisibility, you're in the right place. Number 4. Cambodia. Cambodia might not look like a financial haven, but looks can deceive. With zero FATCA agreements, banks here don't report anything to the IRS, making it a magnet for off-the-grid investors and dollar refugees. They'll ask if you're a US citizen, but won't do anything with your answer. The economy surged by 6.2% in 2023, driven by tourism and garment exports. But despite the growth, nearly 70% of retail transactions remain cash only. That's not by accident, it's by design. Cambodia has embraced informal finance as a shield against foreign oversight. Real estate in Phnom Penh has exploded. Property values are up 48% since 2019, largely due to foreign capital flowing in anonymously. And with no automatic data sharing laws, dollar-denominated accounts are easy to open, hard to trace, and nearly impossible for the IRS to track. It's Southeast Asia's quiet secret, a fast-growing economy with a Swiss-level culture of silence when it comes to your money. But the top 3 are even more extreme. Number 3, Belize, just south of Mexico. Belize has built an entire economy on financial secrecy, and it's not slowing down. With zero FATCA, banks don't automatically report to the IRS, even though thousands of American retirees and tourists funnel money through the country every year. Belize's offshore sector controls over $3 billion in assets, thanks to easy-to-create international business companies and bulletproof trust laws. Want to park your cash here? All you need is a passport and a nominee, director, and your name never touches the paperwork. The country's GDP per capita hovers around $5,200, but banking fees are surging up 20% annually as institutions try to balance secrecy with rising regulatory pressure. Still, the central bank admitted in 2024 that only 28% of deposits are traceable through formal channels. If you're seeking a tropical haven with English-speaking bankers and a culture of "don't ask, don't tell," Belize is hard to beat. And it's still 100% off the IRS grid. Number 2, Algeria isn't usually on the radar for offshore wealth, but it should be. With no FATCA agreement signed, Algerian banks don't report anything to the IRS. In fact, they barely acknowledge international transparency rules at all, thanks to falling oil revenues down 35% between 2023 and 2024. Algeria has seen a rise in offshore currency hoarding. Citizens are moving euros and dinars into foreign accounts, or simply stashing cash locally, out of fear the government will freeze it. Official unemployment sits at 11.5%, but analysts believe the real number is far higher. This financial paranoia creates the perfect environment for unregulated wealth flows. Algerian institutions don't use automated cross-border reporting, and their internal systems are outdated by decades. For Americans banking here, it's radio silence all the way back to Washington. If you want a hard-walled economy with no U.S. oversight, Algeria delivers, but there's still one country even more uncooperative. Number 1, Afghanistan. Here it is, Afghanistan, the ultimate IRS blackout zone. No FATCA agreement, no banking cooperation, no diplomatic ties that would ever allow the IRS to get its hands on your account data. You want financial privacy? This is as off-grid as it gets. Since the Taliban takeover, GDP has plunged 16%, inflation has skyrocketed to 23.1%, and trust in formal banking has evaporated. Only 12% of Afghan adults even hold a bank account. Everyone else operates in pure cash, gold, or hawala. Even when U.S. authorities try to trace remittances, Afghan banks routinely deny requests, citing sovereign privacy or simply not responding. And because there's no IRS access whatsoever, any funds moved here are effectively off the map. Of course, it comes with major risks: economic instability, sanctions, and political volatility. But if your goal is total financial invisibility, Afghanistan is the black hole where even the IRS dares not look. Want to know the flip side? Our next video covers 10 FATCA-compliant countries where the IRS sees everything and why your Swiss account might not be as private as you think. Like, comment, share, and subscribe if you want to stay 3 steps ahead of the financial game. You've just seen the last safe zones on Earth. Don't wait until they're gone.